It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this TradingTips.com video newsletter on the percentage price oscillator, an alternative to MACD. In this video, you'll learn about price oscillators in general, the differences between the absolute price oscillator and the percentage price oscillator, and why many traders think percentage price oscillator is preferable to the more popular MACD. Let's begin. Price oscillators are statistical indicators that measure the difference between two moving averages, normally a short and a long one. The oscillators can be in either absolute or percentage terms. The absolute price oscillator is sometimes abbreviated as APO, and the percentage price oscillator is better known as PPO. In addition, a shorter signal line can also be used on an APO or PPO histogram, just like MACD. APO is calculated by subtracting the value of the longer moving average from the value of the shorter moving average. If the shorter moving average is higher, then APO will be positive, which is bullish. If the shorter moving average is lower, then APO will be negative, which is bearish. This is also true of PPO, but it is calculated a little differently. Instead of measuring the difference between the two moving averages in absolute terms, PPO measures the difference in percentage terms. So the formula for PPO is the shorter moving average minus the longer moving average, with the result of that divided by the shorter moving average and expressed as a percentage. There are several reasons why PPO is almost universally preferred to APO. For starters, APO is essentially the same as MACD. So if you want to use APO, just use MACD. StockCharts.com, for example, doesn't even offer APO since it measures the same thing as MACD. Other reasons for using PPO are, first, it allows you to compare more than one stock. Since PPO is not in absolute terms, you can compare the PPOs of a stock with a $5 share price and a stock with a $78 share price without a problem. This is not the same with APO. And finally, along the same lines, PPO allows you to compare a stock with itself dating back to a time when its share price was considerably different than from what it is today. Because PPO and MACD are so similar, the concept of the MACD histogram has been applied to PPO. The PPO histogram shows the difference between PPO and a 9-day exponential moving average of the PPO. When PPO pierces up through that 9-day EMA, that's a bullish sign. When the reverse happens, it's a bearish sign. Here's an example of Intel's chart, as of May 7, with a PPO histogram drawn above. The black line represents Intel's PPO, and the red line represents the 9-day moving average of the PPO. Notice how the black line fell through the red line several days before the stock began to crash. In this case, the PPO histogram was an excellent indicator that you should either get out of the stock or go short. Adding a PPO histogram to your stock charts is easy. Just go to StockCharts.com and type in the ticker symbol. Then, under Indicators, select Price Oscillator PPO. For parameters, the default 12-26-9 refer to the short moving average, the longer moving average, and finally the number of days in the EMA of the indicator line. The default typically works best. In conclusion, the recent stock market crash should give PPO some extra credibility as the indicator clearly predicted the crash. PPO is a lot like MACD but has certain advantages discussed in this video, and it's easy to use too, thanks to StockCharts.com. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Backus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit tradingtips.com. Sign up for our free video newsletters. Become a successful trader by visiting tradingtips.com.